Hello and welcome to the Durham Talents channel. My name is Jesse Durham. I am especially excited for today's episode because it's going to be an interview with a friend, with a colleague, a husband and a father. We're getting ready to dive into his journey in being exposed to the infinite banking concept, how he's used the infinite banking concept, and then hopefully we'll be talking about what he's doing professionally in that space. I'm looking forward to every aspect of this conversation. Here we go. Keith Carter, thanks for being in here with me, man.
Jesse Durham, thanks for having me. Appreciate it.
I'm tell you what, just again, a husband, a father, by trade, an engineer. Right. And then I think we'll see a tie-in to what you're doing in the infinite banking space with your engineering background and mindset when it comes to how you approach helping folks implement infinite banking. But I'd actually like to go, if we could, back to just Keith the guy. How were you even exposed to infinite banking?
Yeah. Okay. Keep the guy. Still is keep the guy. But just in the beginning, I think we were probably exposed around the same time, about 7, 8 years ago.
And that's what I couldn't remember. I could not remember if we were in the same room. I saw it in 2015, summer of 2015.
Did Brent show it to you?
Yes.
Okay. Was it at a big Saturday event type situation?
I can't remember what day no.
Yeah, because I remember the day we went is, I don't know if you were at that meeting as well, but we had been invited by, friends of friends. And, at the time made a lot more money than we did. And, it's just, you think differently when your cash flow is different and for a good reason. And being able, I'm thankful that we were able to put ourselves in those environments and those situations at the time, because we did learn a lot of things that we probably wouldn't have gotten in our, daily jobs or W-2s without making those connections. So
very happy to get the invite to show up.
Yeah, major key, surround yourself with people that are further than you are along in life and finances and health and your spiritual growth. You want to be able to have that at all times. So because we did, we were exposed to some things that we may not have gotten a chance to see otherwise. And we got invited to a Saturday event where Brent Kessler was at the front of the room teaching for 3-4 hours, and we're here about infinite banking and making loans for yourself and using insurance, and we're just like, what? It's like, what is going on here? So this is things that we've never heard of before, and it was interesting because the first thought is, man, if it's so good, how come I've never heard of this before? How come my family's never heard of this before? This is an outlandish idea, it seemed. And I probably looked at it for a year before I started my first policy.
Okay. All right.
Yeah.
So you saw it in 2015 as well.
I think it was 2015 or 2016. I believe my first policy began in 2017. So it was probably somewhere in 2016 when I started.
Okay. All right. So that's what I'm thinking. I don't feel like ours was I went to an evening event. So, okay, that's what I couldn't remember. I couldn't even remember, because there were a bunch of people that I didn't know, some that I did know when I saw the idea. All right, so I'm thinking you saw it after that I did, but I certainly felt some of those same things that you did. All right, let me ask you 2 questions about that first exposure.
Okay.
What did you connect with or realize at face value, at first glance? What did you take away from there saying, well, I feel certain about this aspect of what I just saw?
Yeah. So one of the biggest concepts was the fact that, which is true, and you see this in Nelson's book, Become Your Own Banker, is your needs. What is your actual needs as far as when it comes to financing versus your needs for death benefit? Over the course of your life, you're going to need to buy things. That's kind of how it goes, unless you're in a situation where you're in a complete barter system. Those are very rare in the States, if they exist.
We call those flea markets, I guess.
Flea markets, yeah. I mean, even then, but even going into that, it's a lot easier to acquire goods if you have cash, or means of transfer, which is what we use money for in today's society. So the need for financing is more pressing over your lifetime than the need for a death benefit. So that was one major key. But then also the other thing is just control. Being able to control your financial system by building your own financing within your policy. Very new idea. You kind of hear of things similar, because when I meet with people that are financially literate and they have some, they know about stocks, they know about loans and loaning against assets. One way I describe it, we use the mortgage example a lot of times, but then we also use the stock example. We have guys like Elon Musk and Jeff Bezos. They are, they have on paper their net worth is ridiculous. And then people complain about how much they pay in taxes, but a lot of times when they're living their lifestyle, people that have that many assets, they can take a loan against that asset, and they can live off that loan for a period of time. Loans are not income, so it's untaxable. I'm not a CPA.
Me either. General disclaimer here.
Yeah, general disclaimer. Do your own research. Talk with your CPA. But loans are not income. I can say that pretty adamantly.
Yep.
And you cannot be taxed on loans, so they can live off things that are loaned against assets that are growing, and then you can pay the loans down with the growing asset over time. And then that's your lifestyle is essentially in a tax-free environment. So the same way people can do that, you can do that with your policy. And you can take a loan against the policy, which is your cash value, and you're able to use that. You pay a small interest rate to the company. You can live off that. You can invest with it. You can pay off debt with it. And being able to do that and kind of have your money working in multiple areas at the same time, it's a form of double dipping, in my opinion. And being able to do that, I thought was a huge concept, something that I never really seen before, didn't think was possible, because again, people say you can't have your cake and eat it. This is literally what you're doing. You're eating your cake while you also have your cake sitting over here earning interest and dividends and building death benefit for you. So
okay, so at face value, then you saw these two things of, okay, I'm going to finance things. I need to buy stuff over my lifetime, so I get that right away. And you liked the aspect of control. Correct. That you saw. All right, cool. All right, so let me ask the second question that I wanted to about this first exposure to infinite banking. Then, what was some aspect of what you saw from the front of the room that you didn't understand, that over time you dug more in on it, and then it did reveal itself to you over time, or study, or reading Nelson's book, or whatever? What was something that maybe provoked thought you didn't understand, and then you pursued further in that knowledge?
Opportunity cost. Now I understand opportunity costs from more traditional means. It's like, hey, if you don't have this, you can't use it. Using this now, you can't use it for something else in the future. But I didn't realize how your policy over time can essentially eliminate your opportunity cost when it comes to accessing funds. At the beginning, all I could focus on is like, man, your liquidity, it's shot. Your dollars, and this is another thing that I didn't capture the first time, that first time I saw it. Because really when I got started, I got to the point where I saw enough right with it that I understood that there was enough, there was a very low level of risk, almost none, depending on how you look at it. And I saw that, and that was enough for me to get started. Now, years removed, I think it's been 7 years removed from my first policy. We have 4 in my household now. Nice. Between my wife and my daughter, and just seeing that was, I don't know, it was the opportunity cost piece. I mean, where was I? Yeah, the opportunity cost piece, because it does go. Your policy becomes more efficient over time, right? So the first year is the worst year that your policy will ever look like on paper. And let's say you do need to finance something, but year 10, year 15, year 20, they're actually giving you more cash value than what you put in to the policy. And usually that happens, the way we build policy is normally somewhere between years 3 and years 8, in that ballpark. So again, you're net positive just from the things that you're already doing. These are guarantees. Which is not, I don't have to put risk in the market. I don't have to put risk in anything else that I have going on. So opportunity cost was something that I did and learn more about over time, and just realizing how it kind of shrinks as your policy becomes more mature and more efficient.
Okay, well that's really neat, because for me, so just yesterday, I'm doing a book review on my channel and podcast. Okay, Becoming Your Own Banker, the original book. Yep. So I'm on episode 18 or 19. I'm really taking my time. I'm really trying to take my time, because my mentality in going through and making a book review on my podcast and channel is not to replace the book, not to replace Nash's recorded seminar or any of that, right? But my mindset is that if our children, my Lauren's children, are the only people that that watch that, I want to go ahead and have that recorded where they can get a hold of Dad's thoughts. You see what I'm saying?
I like that. I like
right?
that. I mean, I've heard of people writing books and
Yeah.
with that same mentality, and I've thought of that myself. So yeah, that's awesome.
Yep. I'd encourage everybody. I mean, whether it's recording stuff for legacy purposes, whether it's writing letters, I like writing letters to my children. Just whenever it strikes me, it's like, okay, my son's at this stage in life. These are the things that we're talking about or that he's doing.
I like that. I like
So,
that. Yeah,
all right.
yeah.
All right. But side note, I like that kind of stuff though. So I don't mind talking about that. So journals, photos, building a family library, writing letters to my children, recording things just for them. I like doing that stuff and I try to intentionally do it. But what I was saying too, though, is in making this study, this book review, I'm at the chapter in his book where he talks about cost of acquisition. So that's what you were just making me think of when you're talking about, something that I heard or was exposed to in that presentation is opportunity costs. It's so true. Nash says in that particular chapter, he says that there is no cost to acquisition when you've implemented infinite banking, because we know, just like you said, those guarantees, that efficiency, that access, that contractual right to access capital that compounds in the future, it's already established. Right. There will be no cost to us in the future to be able to, like before we hit record, we were talking about financing weddings as parents in the future and things like that. Like there will be no cost for you and I because of, that's right, these daughters that we have. Let's not talk too much about that. I don't know if I'm ready. But when it comes time for us to finance anything in the future, we will not have to invest time or money to acquire that opportunity to finance those things because we've already got it established. So I would agree with you. Opportunity costs, I did not understand that. And I would encourage people, even if you've read Becoming Your Own Banker like I have, I like rereading. It's such it's a one-page chapter, actually, that cost of acquisition.
Really? I mean, that's really what it is.
But there's a lot in that. Okay, that's really neat to me. All right, so in your exposure, you saw some things and got them at face value.
Right.
You saw and heard some things that you didn't get that took time. Mm-hmm. All right, what were your next steps after seeing that presentation? What were your actual next steps when you saw that guy in the front of the room talk for a couple hours about this Becoming Your Own Banker idea?
Okay, so again, heard it, shocked and all, right? And they give you like a little pamphlet, and I go home and I'm looking through the pamphlet and I start looking at stuff online. I think I ended up buying my first copy of the book at some point during that year.
Did you read it?
Yeah, I read it.
Okay.
Not immediately.
There's a difference between buying and reading. I got to ask.
Yeah, not immediately. But I did end up reading it, and then I just kind of tinkered with it in my head for a while, and looked at the numbers and kind of looked at the whys and the hows and thinking long term what I want to be, what I want to do, and it is at its core it was already in line with my personal philosophy. I do believe in building well, safe, efficient, guaranteed. I appreciate the guarantees. I believe in finding ways to needing to borrow less so you can lend more for lots of reasons. Private lending, real estate, all that kind of stuff. It was all in line with those paths and directions that I was already interested in, already moving toward. So I believe I was at work when I placed my first premium. I remember where I was when I was making that phone call, and I was on the phone with whoever my agent was at the time, and it was with a company that we have a lot of policies with, and I think my first policy was about $8,000, and that was a lot for me at the time. How old was I? I'm 32 now, so I was 25.
Younger than I was when I got started.
Yeah, I think 25 when I got my first, 25 or 26 when I got my first policy started. And then, again, knowing what I know now, we normally have, when we talk to people nowadays, and as you know, you normally have about 2 regrets from people that have done it for a while and are currently actively doing it. What you get is, I wish I would have started earlier.
Sure.
Wish I would have started earlier, and wish I would have started bigger, faster. Those are the 2 regrets we normally have for people that are actively using their policies.
Yep.
Years in the future, because you see how the growth works and you see how the efficiency works. You see how the guarantees work, you see how the dividends work. And again, that's one thing that you can describe in the beginning. It is a completely different animal when you actually see it happening for you. And it's one of those things, it's like, trust us, bro.
Right. There is an element of that. We want to pull that card in a way.
Well, we got 100 and some odd years of track record, depending on who you talk to, depending on what carrier you're looking at. But it's one of those things. It's like once you see it, it's like, man, they're right.
Right. The product is just the product. And that's, I mean, think about this. Whole Life's been around longer than our ages combined at this point.
Correct.
I mean, just something like that puts things in perspective, I believe. I use a bike analogy with folks a lot of the times. And I'll say, it's one thing to watch some bikes have been around for a while too, right? So what I'm saying is if you see folks riding bikes and having a good time, driving around the block or whatever, and you've not yet learned to ride the bike, I mean, there's some steps to implementing that, right? And I can describe what it feels like to pop that first wheelie or to be trying to play tag while riding a bike or whatever, right? But it's another thing for you to experience it for yourself, for sure.
It really is.
Okay. All right. So here's what I want to know, though. I feel like you skipped over a little bit. And I'm gonna dig deep on this one point of, okay, you're exposed to the idea. You at some point got the book. But you jumped right into paying that first premium. I want to know what questions in your head you had to get answered to pay a first premium, or what compelled you from the time, because you made like it was maybe around a year, maybe a little less, a little more, whatever. But what was the actual thing that happened that made you pull the trigger on it? James Nethery has this quote that I love. He says, "It's all conversation until someone writes a check." So you jumped right to the premium part. I want to know what compelled you, what convinced you, what persuaded you to, all right, I'm going to do this. They've been doing this. Yeah. I'm going to do this.
Again, I was looking at my downside risk, so it's like what could go wrong? Okay, I see that my guarantees, I see that my capital is always protected. I am essentially getting in business with my future self. That's one way I describe it when I'm talking to clients. And you are getting in business with your future self, and this deal is being proxied by the insurance carrier, okay? Because when you are taking loans and when you're, paying back interest and extra interest, which is PUA, and get into that conversation later.
Yep. Good thing to go ahead and plant the seed of. Yeah, right. That's what it is.
Yep. And knowing that your losses are nil, and then even when you have loans outstanding, that is backed by your policy and your death benefit. So knowing that all that is already in place, it's secure. It's worked for a long time. It's not new. It's not on trial. It's not being figured out. It's been figured for a minute. And just knowing all that gave me enough peace saying that, hey, this is a safe place. This is a more beneficial place for me to store income and store my finances to be deployed in investments or, again, paying off debt or finding ways to make money, play the real banking game. This is a good storehouse for that wealth. And at that point, I said, yeah, let's do it. The worst that can happen is you get your interest, you get your guaranteed interest, you get your death benefit, and you get growing cash value. That's the worst that can happen.
Okay.
The literal worst, because, the dividends, as we say all the time, are not guaranteed. We've just been paying them for 100, 140, 200 years, depending on, carriers that you're looking at, a long time.
Right, exactly.
So the worst case scenario, you got life insurance, you got your death benefit, you have growing cash value, and you got guaranteed interest. So that was enough for me. So
to me, what I hear you saying, or how I visualize what you're saying, is you're essentially having this inner dialogue where you're just going through a checklist of, okay, it satisfies my desire for control. Okay, it satisfies my desire for having guarantees about where I'm going to put my money. Okay, and I'm just visualizing you going through a checklist of checking the boxes until you get to the point where you're like, and you said this earlier, well, I know enough to know that I'm ready to get started. Don't know everything about it, but I've checked enough of these things off of my list to know that, okay, I'm going to do it, and I'm going to write the check, and I'm going to get this policy started for myself.
Yeah, that's 100%.
Is that fair? Okay.
That is fair, because it's one of those things where there's never a perfect time to do anything.
Right.
So if you...
Other than right now?
Yeah, you'll know. That's one thing we say a lot, because, Nelson, his background was actually the forestry industry, right? Nelson Nash. So... I think this is in the book as well. The best time to plant a tree was 40 years ago.
Right.
And the second best time to plant a tree is today. And you got to look at that in your policies. we've had that thought ourselves, like, man, how come nobody told me this when I was 1 year old? Right. Someone should have told my parents. But the next conversation that you need to have after you get over the kicking yourself and all that, it's like, okay, well, we need to get going as soon as possible, because you're gonna end up like we were, and most other people that are doing this after 4, 5, 6 years. It's like, man, this is working really well. It's actually working a little bit better than they told me it would. So in knowing that, again, there's guarantees in there, it's working for you, and just knowing that, hey, it is what it is. It's not a whole lot of bells and whistles. It's not super complicated. I mean, there's some things that it can get complicated, but like you said, at that point, I knew enough to get started. You know, if you're going to go to your favorite restaurant from your house and say, hey, I'm only going to go when all the green lights are lined up together, you would never get there. You would never get there. Sometimes you do have to wait. Sometimes there are detours, and there may be construction. There may be different ways that you have to get around there. But you already had the desire. You had in mind that you knew what you wanted. You knew what you wanted it to taste like. You're going to go get your favorite meal. We can paint that picture with what we do here, because we know what the outcomes are, and we don't have to guess. That's one thing that I feel very proud of, that when I talk to someone and say, hey, you will get this type of operation, you will get this type of behavior out of what you're getting here. And I sleep great at night, because I know for a fact that what I say is going to happen, or it will happen better than I say. I couldn't be a stockbroker.
Right?
I couldn't do it. One that say, hey, I'm selling the stock or whatever. Hey, if that's what you're into, we always encourage our clients, say, hey, invest in what you like and understand. We are big on investments. We believe in it. But we have everyone has different risk tolerances.
Sure.
Everyone has different values, and they invest with their values, and that goes, that can go.
Different gifts, different skills, different experiences, backgrounds, all of it. Yeah, for sure.
For sure. So,
well, you make me want to ask you a professional question and jump in on your personal story real quick. Okay, so if somebody asks you, what's the risk in me doing this? And I'm going to say it that way, right? Because that's maybe how someone who's just been exposed to this idea would say it. What's the risk in me doing this?
Okay. Yeah. So again, I probably ask, well, what do you consider risky? That's probably one of the first things I would ask, in as far as establishing a baseline for what people think risk is. And I assume
I like that, by the way. I like answering a question with a question. So I can appreciate you just kicking it back to somebody and letting them tell you and describe it to you. That's cool.
Establish the baseline, because if I have a definition of what risk is and you have a definition of risk is, and I'm trying to describe mine to you, we could be on completely different planes.
I love it.
And so we want to at least establish a baseline there, and then, but usually it refers to risk of loss, right? Usually that's what it comes down to. And to me, I believe if you have your policy and you're using your policy, even if you don't use your policy, the risk is none, right? So,
yeah,
because you have your cost basis, that's a part of your policy. That is what you actually pay into it. We don't have the cups with us today, but the cash compound, they use the 3 cups. Your first cup, that is your premium. Those premium dollars, they never go away. They're always in that first cup. That second cup, cash value, this is the what you can loan out against your policy. This is your cash value. And then you got your death benefit on the other end. But that money never goes away.
They only go one direction. They go up.
So it goes in, cash value goes up, your cost basis goes up. This is something that I think is really cool. We talk about it when we go to the retirement time, passive income time. But you can actually go back in and get your cost basis much later in the game. And then tax-free up until your what you paid in, and then start accessing the other things. So that's something I learned just in the last few years. And being able to do that is you essentially have a policy that's earning interest for you, earning dividends for you, that you have $0 in that game, and it's just cranking. It's amazing to see.
I love it.
It's magic.
So I love that answer that you first gave about asking somebody a question back when they've got one for you, when you're the professional and you're mentoring and coaching. Right. When it comes to the product, yeah, it only goes one direction. I always like circling back to, just like Nash does in the book too, though, the human problems. I'll say, well, if I give you an honest answer here as a coach, the answer is going to be you. You are the risk factor here. How you treat this ideal asset, because it's the ideal asset.
It is.
How you treat it is the risky part.
Yeah.
Are you going to be an honest banker? Are you actually going to fund it as your private banking system? What are you going to do? How are you going to treat it? And the analogy I'll give there is, you could put me beside a professional driver, put us both in the professional car. I'm going to say the professional is going to do better, right? And that's just my analogy for, are you going to be an honest banker? Well, I don't know.
That's right.
Right. But how you treat this system, how you treat this car is going to determine whether you cross the finish line or whether you put it into the wall.
I like that because it's putting the onus on, the person that is doing banking, the driver, because again, it's about ownership. It's about you becoming your own banker. You own the bank. This is an ownership system. So we want everyone that is, in our purview to be able to have that ownership mentality saying, hey, this is mine. I want to take the steps to learn. I want to take the steps to become efficient. I want to take the steps to be able to use this at a high level and not always have to depend on other people. It is
yes.
Self-autonomy is huge with what we do here. And I love that, I love that. I mean, I think we attract those type of people that want to be more and more self-efficient.
That's who we're looking to attract.
And, so that's one thing that I really appreciate about it, because you've got to be a good driver. You got to become a better driver, and there's room to know. Again, when I said I got started, I knew enough to get started. I've learned so much since I've got started. My first policy, my second policy, my wife's policy, my child's policy.
So let's go there. Let me go back to the personal story. All right. So when you said that the 8,000 was a big deal for you, you made that payment while you was at work one day or whatever to get the policy started. Right. All right, pick up from right there. What was next? What were you intending to use the policy for? How did you feel further about making a significant payment for yourself?
Didn't have a plan for it originally. It's just I knew enough to get started.
Okay.
Since then, I've used the policy to. I think the first thing I paid some debt down with it. And then I ended up buying a duplex in 2018. I used cash value to help with the down payment. I've used cash value policy loans to help with renovations and rehabs at that property. New HVAC systems, same property.
Is that one you still have today, that property?
Sold it last year because it was a great time to sell.
Okay.
And paid back a bunch of policy loans.
So you rented it out over that time?
Yeah, so
did you live in and build out the other side?
It was cool because I was able to house hack that, and I lived in one side and I had a long-term renter on the other side for a while. Later on, I ended up getting married, so I moved out and we turned that side to a short-term rental. So we had Airbnb on one side and a long-term renting on the other side.
Oh, neat.
And it worked out great. It was beautiful. And then, I think it was last year, and I was looking at the numbers in the market, looking at what we had going on, and I was like, you know what? We had a baby on the way. Like, this would be a really good time, man. We can get out of that, pay off a lot of debt, pay back policy loans, and put us in a really good spot moving into this next year. And worked out. So we ended up I found a friend of a friend that was interested in the property, and, we had a good talk and had a good transaction, and it worked out.
Fantastic. All right. So I love everything about that. And these are some things I didn't know. I feel like maybe you'd said something about the duplex before, but but the marriage, baby here now, these are all more recent things. Okay. So you started that process with just the one policy. So I guess my next natural question, is at what point did you begin to add policies to create a system, being the family guy now, right, the husband and the father, and what did that decision look like on when to get those policies? How much of your cash flow, not a number necessarily, but how do you consider how much of your cash flow to put towards new policies as you grow and scale a system? What did that look like for you?
Right. So I'm usually a long-term thinker, big picture thinker. So, even when I was younger, I'm thinking family, I'm thinking about legacy, I'm thinking about, kids and, household and all that kind of stuff. So that was kind of my orientation for by and large. So, so when my first policy had that for a while, I don't think I started my second policy until maybe 2021, maybe. I think it's about 3 years old.
Okay. So three or 4 years of using the first policy.
Right.
Yep.
Yeah. And it wasn't expanding because, I had a windfall, and I was like, okay, I want to go ahead and kick off another policy with the windfall. And, kind of spread that out over time and start, building that with this 2 policy system. And again, it just made sense trying to figure out ways, how can I get my dollars to pass go? I use a Monopoly example sometimes, but you get your dollars to pass go. So every time you get your dollars to pass go, you don't collect $200, but you get interest, dividends, cash value.
Right, it goes up.
And does benefit. You get all that every time it passes go. So I'm like, okay, how many of my dollars can I get to pass go? And I just try to get it on the board game, on the game board as much as possible. So had a windfall. All right, how can we get it in the game? So we did that, or I did that at the time. Then didn't get married until I think that was the year before I got married. So that was probably 2020, and then I got married in 2021. But I think I had my wife get a policy after we got engaged or something like that, because I was teaching her how this worked. This is a new concept.
Of course.
Bringing this to somebody that hasn't kind of been in it for a while, it's a learning curve for sure. So
yes,
and it's just talking through that and just making it make sense. It's like, hey, this is not a bill. This is not a bill. This is us building an asset, All
right, so I think I know the answer here, but you tell me, typically, and would you say that this is true, that when you're talking to folks who are vetting this idea and considering becoming clients of ours, isn't it normally your experience that one person in the household is more numbers oriented or money oriented or takes care of that aspect of what the home does, or?
Usually,
right.
You see, one person kind of, makes the money. Well, you see if someone that has, you have 2 working people, maybe one person earns a higher income, maybe they both work, but maybe one person pays all the bills.
Right.
All that kind of stuff and that kind of things.
So in your household with her, okay.
She does the paperwork, and I just don't have patience for certain types of paperwork.
Okay.
When it comes to, I don't know, government stuff or US, DA, we're working with USDA on our property for something right now, and that type of tedious stuff, that's fine. But when it comes to numbers and, policies and that paperwork, I'm good with.
Okay. All right. So when you're bringing this idea to her and she's got patience for paperwork and stuff, how did she receive the concept?
At first there was, some inertia, but it was like something that I was like, hey, this is the vision that I have for us. So this piece right here is not really negotiable. This is something that we had started a long time ago. I think 2016. I didn't meet her till 2019. I think the very end. I don't think we met in person till the beginning of 2019. I think.
Okay.
So it's like, hey, you gotta trust me. I feel like this is what God's given us to do for my family. You're part of that now, and you gotta trust me until you figure this out at the level that you would want. So there's ups and downs in that conversation, but I think we're at a point now where we're really clicking.
All right. So let me ask, and I'm glad that that's where you're at, and I'll even go to the point where if I'm talking with a prospective client and they have a spouse that is just against, I'm where I'm just not really looking to necessarily write policies for that one spouse if they both can't be on board. Now, I'm not asking you your answer to that, but I guess what I'm going to get at is you're at a good place now. You'd already implemented this concept for a few years. She came in on it. You're saying, hey, here's the picture. Here's how we can, live out our lifestyle and proceed forward unconventionally.
Yeah, unconventionally for sure.
What action steps did she take beyond having a conversation with you? Did she read the book? Did she watch a presentation? Did you send her a video recording of something?
Yeah, she's watched a couple videos, and I don't think she's read the book.
Okay. And again, I would say that's pretty typical, but I'm just curious to ask that stuff out loud, right? I'm curious to ask that stuff out loud.
As I know, she's watched some videos and stuff, and we've talked about it before. I know we're actually planning another time to just sit down and kind of discuss, long range stuff about our policy. So we actually that's yet to be on the books.
Okay.
So we kind of schedule time and sit down on certain topics that we really want to deep dive in. We'll say, hey, all right, well, let's set some time aside for it and let's get into it. So
I think it's good on two levels. So the two things that you make me think about right there is, number one, I think it's good to have those intentional times where you sit down and you talk through, here's where we're at, here's where we're going, get on the same page. Let people be as aware as they want to be about what's going on. But at the same time, because this is a lifestyle to be your own banker, there's a part of me that says it's okay if not everyone knows the nuts and bolts, because it just becomes the lifestyle. That, like our children, for example, with them being younger, they just know that that's the first thing we do with money is build our private family banking system. Right. And then we use that for vacations. So they're more excited about vacations. So they get that, right? Like they understand that, well, okay, if we want to do something as a family, we're probably going to use our private family banking system to do that thing with, because that's just how we do things as the Durhams. You know what I mean?
Yeah, no, it makes sense.
So I like that.
I guess for you, like when you first came on, I guess with family and wife and all that kind of stuff, I guess how did she receive it the first time she saw it?
So Lauren wasn't there for the presentation. Who knows what I came back home saying, being excited about, because I was like you, I saw the control aspect. I saw the independence and autonomy. I'm like, I want that. I know. Right. Like it could be an independence about probably any facet of life, and that attracts me. So, okay, be financially independent. Yes, please. Right. So, I'm sure I shared a video with her. I'm not sure if she's read the book all the way through. I feel like maybe she has, or she's listened to the audio. But that's why I say I feel like that's pretty typical as well, that one person takes a deep dive, the other person's along for the ride, and they're there for the lifestyle. Yeah. They get that part. They get to live out the benefits.
That's it.
Right. Okay. All right. So take us more to present day then. So you've got 4 policies. Yes. You've been doing this for several years. Correct. In your personal life. You've even incorporated things that you've done in real estate, but you're married, got the baby now. You're doing some cool things on your property. I'd love to hear anything about current date, and then we'll make a transition into the professional side of things, and you can even put on he's literally got his coaching hat already on anyway. But I'd like to get the last end of where you're at now, personally, having implemented this concept.
So right now, again, we got the 4 policies. I just started the most recent one was for my daughter. She's 5 months old. I was able to put that in place when she was 2 months old, and it's fun to just look at, that policy illustration and say, man, by the time, she's 15, by the time she's 20, she's going to have, 50,000, 85,000, 100, whatever, ready for her in cash value for whatever she needs or whatever we need. If it's expenses or car or whatever, she'll never need to go finance a car.
Just doing what the policy is going to do.
Policy. You never have to finance a car. She would be able to go to her policy to do anything like that. I mean, at that point, it won't be enough to buy a house now.
Fair enough.
But a very nice down payment, So things like that are exciting, even for expenses that we may have for her unforeseen in the future. We have a storehouse that we can reach into to be able to use, and not, aside from an emergency fund, aside from, our lifestyle fund or whatever what that looks like. So that's cool. And being able to put that in place, something that's like, man, I wish my parents knew about that when I was getting going, couldn't imagine what would be available to us at this point. But, now it's our responsibility to make sure that we can do that. And I'm excited to be able to do that and be in a place to have the knowledge and the resources to be able to do so. So I love that. So right now we are looking to buy an SUV. So we have 2 cars. Well, so I just finished up. Well, I guess we can take a step back. So we're building a high tunnel. We built a high tunnel.
I saw one picture so far.
I just finished it. And this is something that we're doing with the USDA.
So explain to the folks who might not be so outdoors minded as you and I what the high tunnel is.
Yeah, so high tunnel, you've probably seen them while you're driving on the road and through some country areas. You see these big metal and plastic structures, and they have plants in them, and they're see-through. It's like a big greenhouse type situation. So we've got some property. We want to start growing some things, and that was one thing that we saw that the USDA helps out for new farmers and stuff like that, or new people that want to be able to grow crops. So we saw the program, and man, this looks really good. I think we can qualify, and we did. So we're actually able to offset some of that cost with the grant from the USDA, and some of that money that we needed up front, some of it came from a policy.
Fantastic
credit, and then we're just waiting for them to get the final approval. So now we finished that. The day I finished that, my truck gave up on me.
Oh man.
Yeah, it was a beater truck, but it was a beater truck that I thought I'd have for quite a bit longer than I had it for. So they gave me the number, and it's a little bit higher than I wanted to hear from the shop. So we're still figuring out what we want to do as far as do we want to get a new truck, or we just want to sit that to the side for now and go ahead and look and get an SUV. We're looking at our cash values and trying to figure out where we want to deploy it first. So that's trying to figure out. So the vehicle situation, that's kind of up right now. And trying to think what else.
What a change, huh? Right there on that point. What a change to, just imagine how most people, when that situation happens to them, to where the car goes out unexpected, right? Like you need to expect the unexpected. We could go along that line, but because you've been proactively building this private banking system of 4 policies now, you're in how much stronger of a position does that put you in to where you can decide to go the conventional route if you need to, want to, whatever, right? But then you've also been systematically building up this private banking system along the way where you can be in that seat of choice to where, okay, are we wanting to use this family access to capital for the things that we're doing on the property, for vehicles, for our next real estate, whatever, like any of it, all of it. Because with that system, you're not asking permission.
I'm not.
You're not having to front some kind of extra collateral. It's the death benefit from the policy. So you know what I'm saying? Yeah. So what a strong position to be in, at least. Nobody wants their truck to die, but I'm just saying.
That hurt my feelings, so I'm not going to lie.
Right. I understand.
But yeah, so that's kind of where it is there, and just figuring out which direction we want to go. But another thing that I've been, wanting to, kind of perusing and looking through is, what asset can I pick up that could pay for a new vehicle?
Mm-hmm.
And that's the way I think about a lot of things. And, one asset class that I've learned more about in the last couple of years, and I think would be very viable for a situation like this, is mortgage notes. Long story short, if you're not familiar with mortgage notes, it's essentially you're buying the debt on a property. So you would not be the landlord, you would be like the bank. So this would be a natural progression or natural outflow of someone that is becoming their own banker. It works out really well where you're able to, again, step in the place of the lender, you acquire the debt, and you get paid the mortgage. So say if there's a renter and a landlord at this property, the renter pays the landlord, and the landlord would then in turn pay you because you would be in the position of the bank here.
Mm-hmm.
So this is an entire separate asset class, but my mindset is like, you know what? If we get a SUV that's $30,000 and the payment's $400, I could probably go find a note for $30,000, $40,000, $50,000 that pays out about $400 and $500 a month. It's going to pay for the next 10, 12 years.
Longer than you would have the truck or vehicle.
Yeah, longer than I would have the financing for the vehicle, because the vehicle is only financed for 4, 5, 6 years. So I like trying to find ways you can do that. And
I love it.
That's one thing that we're looking at right now is different ways to probably say, okay, what can we acquire that pays for it?
Right, letting assets pay for liabilities. Right. Need the next vehicle, going to get the next vehicle. But I love that level of creativity where you're thinking of how can I make these dollars perform multiple tasks for me. I always talk with folks in that vein of thought of how can we have our dollars create multiple or accomplish multiple tasks for us. I love that. That's neat.
And then you could take the financing that you need for the mortgage note. You can take that from your policy. You can still do the traditional finance with them if you got good credit. Hey, our credit's pretty good right now. Being able to do that and maybe get a pretty good interest rate. But then again, the policy bought the note, but the note's paying for the car and something like that. So
I love those layers.
Structure things that have the best outcome. When you got the flexibility and the leverage to do so, you can make those type of decisions. So that's what we're pursuing and kind of discussing and looking through right now. So.
Beautiful. I like that, and I think that's going to be really helpful for a lot of folks because there are many people who, beyond infinite banking, they have interests in life, right? And that's the natural progression. Nash would say is, well, you're already doing things in life.
You're already doing them.
So just be the banker and finance whatever that thing is that you're doing, whether that's running a household, whether that's running a small business, whether that is investments you do decide to make in this particular, portion of the real estate world, because there are so many things you can do in the real estate world, and you just described one particular one that's really neat, and another way for you to be able to turn your dollars over more times, create new cash flows into the future, above and beyond covering your need of this liability, which would be the new vehicle. I love everything about that. Okay, all right, so you've already got the hat on, I've said. I feel like you've brought us up to date on what you've personally done with Infinite Banking. How long have you been in the coaching space? What did that look like getting for you? I mean, when were you licensed? All that kind of stuff.
Right. Okay, cool. So I'm the type of person that if I believe something is helpful to you or anyone else, I am going to share. I am not a gatekeeper in any ways. I'm not trying to say, oh, I'm the only one that can do this. You can figure it out yourself. I'm not a crab in any shape of I don't have that crab mentality in any shape or any form of imagination.
If I can't get out, you can't get out.
Right. No, that's not it. People say and compliment my clothes. I'm like, oh yeah, I got it from here. I paid this much. Hey, here's a link.
Right.
I don't care. I'm willing to share. And
I do like your hat, by the way.
Thank you. Yeah, we'll get to that. So one of the things that I realized that over time, after I learned about it and understood enough for myself to see the benefit, I also began to see the benefit for other people. So yeah, I would share. I'm like, oh yeah, maybe this is something you need to take a look at, and check this out, or hey, this is something I learned a while ago, and some people receive it one way, some people receive it the other way. I didn't care. It's like, hey, I know what it's done for me. I know what it's doing for me, what it will do. And this is it's not something that's risky. I'm not saying you need to go buy, this stock on this date because such and such. You need to go buy this crypto or this stock this date.
Just like you said, when you tell somebody about Infinite Banking, we're sleeping great at night. We're sleeping better because we did tell them about it.
Yeah. And the fact that, again, I know I'm not exposing people to risk in any way. So that was happening.
You just naturally talking with friends and family.
Friends, family, acquaintances, just because, again, I thought it was interesting. I thought it was helpful. So that was before I was licensed. I wasn't getting paid for any of that.
Same.
That kind of stuff. It got to the point where I ended up getting my license in 2020, I believe. And sometimes when we talk about what do you want to do, one question that I was asked, and I've heard this asked multiple times, what do you like to do for free? What would you be doing even if you weren't being paid for it? It's like, well, I guess I was already doing that.
Yeah, you were already telling people just out of your animation of it. Yeah,
and it was interesting enough for me to do that, and so I was like, wow, so maybe this is something that I want to do in a professional sense. So I ended up getting my license in 2020. We started. My wife, she came on board and she was excited about branding, and she got with this animator and she built some stuff together, and now we have a brand. It's called the Insurance Engineer. That's my
very apt.
Right. Yeah. My background being in engineering, electrical engineer by degree. And that's what I graduated in, minored in business. I just completed my MBA. This past week. And so definitely happy about that. And she made this little guy. So this is Ty. It stands for the Insurance Engineer. It's kind of my my avatar. Is kind of like my gecko, my Geico gecko is Ty. And the insurance engineer, it is what it sounds like. We engineer policies, we engineer our lifestyle. We help clients design, live a life by design and not by default. And we help provide peace of mind through policy design. And those are some of the things that we're big on. And I just, again, appreciate it. I'm thankful for the knowledge that I've acquired over time. And I'm thankful for the people I get to work with you and everybody that's part of the Cash Compound. It's been fun, and we're just getting started. Really, just getting started. So again, when I pick up the phone and I have those phone calls, it doesn't feel like work. It doesn't feel like sales. It's just education. It's just education. People have questions, and usually when they get their questions answered, I'll pepper them with some other ideas that maybe they didn't consider, and then they may have questions on that, and then at the end of the call, we're building that relationship. We'll have calls in the future and all that kind of stuff. It's just being able to see that light bulb go on for them saying like, well, so you mean that you never really lose, or you mean that this always goes up, and you mean that your death benefit can't go backwards? And I'm like, yeah, that's
It's so rewarding, isn't
Yeah,
it?
it is. I love to see that, and I guess that's me just having that teaching affinity is fun. It's fun. I appreciate it. I enjoy it, and it's so what we do. That's the insurance engineer. So
I love that, and I didn't know about your wife's involvement in the branding, and so I like that. That's very neat.
She's a beast when it comes to she's trained as a UX designer. She does web design. She sources artists and animators when she's building projects for me and also for other clients. So she actually put the people together to be able to create this animation and on this hat and all the designs and stuff. So she's really good at that stuff, and I am very appreciative that I've got that in house.
Right? No, absolutely, for sure.
Yeah, my website, all that stuff. That's all her. Podcasts, all that is her.
She did well, and I agree with you, and that's what I've loved about our friendship over these years is that number one, just when Jadu and Jonah and me and you, we're learning this thing, we're implementing this thing. We'd message each other and we'd see each other from time to time, and we would talk about, well, have you read this book about infinite banking, or what are you doing with your policies, or did you know that you could pay extra premiums? Make sure to get updated policy illustrations every year, and we would share things personally because we were excited about it, we were animated about it, and I was doing the same thing, talking with friends and family members about it along the way, and then now to see us, in the same house, coaching and mentoring and teaching folks. And I love that philosophy. I love that philosophy of just trying to share our best practices, put plenty of content out there. I mean, I know that people are going to have a lot of value from hearing your perspective and these other guys' perspective as well. And I just like that approach. I'm attracted to that approach. That's what happened to us. We showed up in a room where somebody educated.
That's all it is.
Just put the ball in our court.
Yeah, you educate, and then the people, an informed person, will make whatever decision is best for themselves. I don't push. I don't ever push. I want people that see what I see, and if they can, they make whatever decision is best for them. If they don't, that's fine. That's fine, because the last thing we want is someone to have a misunderstanding, make a decision to start a policy, and then end up canceling it down.
Say, why did I have this thing again?
Right. Why do we have this bill? Why do we have this expense, and not really understand? I would hate for that to happen. So sometimes I'm trying to back people off.
Yeah. Oh yeah.
Hey, trying to talk them out of it a little bit, because again, they need to understand. They have to understand the why about what's going on. And if they do understand the why of what's going on, they do see what they should see for themselves and how they can use it moving into the future. They make whatever decision they need to make.
Yep. I had a phone call it might have been yesterday. This week anyway. A guy called me up, owns businesses, great cash flow. He's obviously acquired a lot of different assets over the years, right? And he's coming to me and he's excited about this idea, likes the way that we educate and present, right? But here's the line that he gives me, and I told him, I'm not bashing on you. I'm just repeating back to you what you said. And what you said is that you kind of view this as one more arrow in your quiver. There's nothing wrong with that. Again, like me and you, we know that we're going to sleep good at night if a client buys a properly structured whole life policy with a mutual company that pays dividends. That's a great asset for them to own. It's the ideal asset. But again, going back to that car analogy, it really matters on how you drive that thing, because this is a process. This is a lifestyle if you're actually want to become your own banker. So there's nothing wrong with just owning a policy, letting a policy do what a policy does. But when I have somebody on the phone like that with me, my goal and purpose, as long as they're open to learning more, as long as they're open to the idea of reading the book, watching more, having further conversations, that's my goal and purpose is I want this first phone call to just simply turn into a second phone call. Where they're telling me, okay, Jesse, I did get in the book. Yeah. You know what I'm saying?
I got some new questions for you.
Right, exactly.
And that goes back to the risk factor, right? The risk factor is yourself. This is the product. Yeah, the product's cool. That's good. But just like, Nelson says in the book, the behavior of the policy owner is more important than the structure of the product to an extent than anything else.
Yes.
Because if you're running your policy into the ground, you're driving your car into walls again and again and again, it can only survive so much. It can only take so much damage.
Yep.
And that's what we're here therefore to kind of coach and help guide along the way, to help build that expertise, because we want everybody to be experts. And you don't need everybody. Everybody doesn't have to go sell stuff. But again, you should be an expert in your field. You should be the doctor of your own opinion, and we want that opinion to be informed.
Yep. It's not me being your banker, not Keith being your banker. It's you becoming your own banker. That's exactly right. All right. So I want to go ahead and plant the idea that you and I could record some more podcasts in the future, that we could address some things professionally. I mean, I knew that I first wanted to be able to get your story out at least, right? So folks can know who you are, because I appreciate having you as a friend and seeing what you're doing in the space. I'm really excited about that. So to get in touch with Keith, we'll make sure to share some contact info, right? Yeah. The insurance engineer. But I've not forgotten. All right, you told me when we showed up here today that you had some scripture on your mind, and I'm more than willing to give a minute for that, some time for that. Now, I'm not saying a minute. You and I, you're looking at your phone a little bit too, like I am. We've got a meeting right after this, but we wanted to get this podcast in. But I'm saying I haven't forgotten. I've actually been looking forward to what's on your mind there. What made you think about a scripture for today? It's
a few things, because I think about, again, think long term, thinking about how you're being shrewd and prudent with your funds, and I think about the ideas of stewardship, and it's like we don't really own anything. God gives it into our care to nurture, protect, build, grow. You think about the parable of the talents. It's funny.
Yes.
We look at I think we've talked about this before, but the parable of the talents. The master went away, and he was given a different measure of talents to the different servants, and there were servants that went out and participated in commerce and made income and doubled and tripled some of the what they got. But there was one servant that didn't, and the master gave him an alternative. He said, "You at least could have did this." So it's
at least could have.
Matthew 25:26 through the 28. So this is when the Lord came back, and he said, "You wicked and lazy servant." So this is the servant that went and put his talent,
buried it in a hole in the ground.
So he had fear of loss.
Yeah, he said that out loud, right? He said, "I was scared."
Yeah, he had fear of loss, and instead of, actually going out to work with it, yes, there's risk involved. You going out into commerce, going out into business, but because of that, he goes, "Well, let me at least not lose what I got, and be somewhat conservative." But the Lord came to him and said, "You wicked and lazy servant, I reap where I have not sown and gather where I have not scattered seed. So you ought to have at least deposited my money with the bankers, and at my coming you would have received it back with my own interest." Therefore, he took the talent from him, and he gave it to the one that had 10 talents. So I hear that, and I look at it, and it's like, okay, yes, we could participate in that with these other banks. Banks need deposits right now. People are fearful of banks because of all the collapses. That's why you see the interest rates are so high for a lot of different reasons. One of the reasons that is like, hey, they really need deposits for banks to be able to do what they do. So they're offering all these incentives and interest rates and all that kind of stuff. So you can participate in that way, in the very least, or you could do that in a system in which you own, and where you can position yourself to be the lender and not the borrower, which you see in a lot of other scriptures, that we would be able to, Deuteronomy 15:6, be able to lend to many nations and not borrow. We want to put ourselves in that position. We are better off to build ourselves in that position, becoming our own banker rather than sitting our money in another bank. So again, philosophy-wise, this agrees, with what I'm trying to do, what I want for other people I know in our circles that are trying to do. It's like, I think we have something that could fit that plan for you. So that's why. And there's plenty of others.
Listen, I'm good with that one. That's why I named that passage is why I named my podcast Durham Talents.
I figured.
Right. And I didn't know if you'd considered that, but yeah, that's the passage that connected with me the most when I was coming up with just how to start sharing this information online and YouTube and everything with folks. So absolutely. So I love that. I'm glad you brought that one up in particular. Well, anytime somebody says, "Hey, I got a scripture on my mind," I'm excited. I'm just as excited to talk about that as infinite banking, and because that's our come from too, though. And that's the same filter that I have on approaching becoming your own banker. Is I want to be that good steward that gets told, "You were good, you were faithful." That's what I'm looking for. So, man, I really appreciate you being on here with me today. Okay, and again, I've already planted the seed. All right, y'all heard him. He's willing to come back on here, and we can chop up some different things. Awesome. Well, this has been a great pleasure for me. I've really enjoyed my conversation with Keith. I know you've gotten a lot of value out of it. What I would ask is if you'd like to connect with him, reach out to him. If you know me, like to connect with me, reach out to me. I've got a free introductory presentation and my calendar link on my website. That's durhamtalents.com. This has been a great pleasure for me. Look forward to our next conversation. Have a great day.